All right. Again, good morning. Thank you all for joining Autopaychecks as we partner with a team from the Colorado Department of Labor and Employment's Family Division for our webinar today. So Autopaychecks has made it a priority to educate and bring relevant. Okay. Thank you for your patience. And just thank you for joining us today. My name is Manon Jacob. I'm here with Autopaychecks. Many of you may recognize me by now. I've done several of these webinars this month even. Again, we're grateful that the team from FAMLI is taking the time to share more details about the implementation process of this state-run paid family and medical leave insurance program, and to be able to answer a lot of our questions today. So for those of you who are Autopaychecks clients, I want to just remind you that we have applied for your family employer ID number. For those, unless you've requested us not to do that, and we will begin calculating and collecting employee contributions and employer contributions for businesses with more than 10 employees as of January 1st, 2023. And Autopaychecks will be remitting those contributions and completing your quarterly reporting as well. So just before I turn things over to Jessica and her team, I want to do a little bit of housekeeping. Please remember that we are recording this, so we want to keep the audio clear and ask that everybody stays on mute. That being said, we do encourage questions to be submitted through chat. So if you pull up your chat function and type those questions in, I know that the team is going to be addressing as many of those as they can. If you did send in a question early, I provided that to the team yesterday, so that hopefully those will be addressed today. Again, I always get this question. This is being recorded. The recording will be posted on our blog this afternoon, along with the slides from this presentation. And if you've missed any of the Autopaychecks webinars this month, all of those recordings and presentations can be accessed at our blog, autopaychecks.com. So with that, I'm going to get out of the way and turn things over. So thank you for joining us.
Thank you. And thank you all for having us here today. I'm Jessica Smith. I'm the communications manager for the family division, and I'm joined by a group of team members here on the call. We've got David Gallivan and Lydia Walgorski. They are our policy gurus. So they're going to be leading the presentation for us today. And I have several members of my communications team on the call too. So you'll see some helpful links being dropped into the chat as we go through the presentation. So you can refer back to our website to get some of these materials on your own. We'd love if you held your questions in the chat until the end of the deck. I know Manon was so grateful to send us over questions ahead of time, and many of those are covered in our presentation. So hopefully we'll answer most of your questions through our presentation, but looking forward to some Q&A at the end. And with that, I will hand it over to David and share my screen.
All right, excellent. Thank you for that introduction. So I am David. I'm the branch manager of compliance and appeals for the Colorado Department of Labor paid family and medical leave insurance program. And so, of course, we do have today here as well Lydia Walgorski, who's going to be giving you some policy information, and a couple other members from our team who are going to be helping out. Keep an eye on that chat. We will be dropping in relevant links as we move through these slides. But let's talk a little bit about what our agenda is going to look like today. So we're going to start off by talking about what is family. Then we'll look at a timeline for implementation. What are the types of qualifying events for family, how we're funded, how we define wages, how you count your employees, how you calculate premiums. We'll talk a little bit about private plans, local governments, and we'll share some employer resources all before we stop to take some questions. So what is family? Family is a social insurance program that will provide paid leave for Colorado workers during certain life events. And we'll talk about what those events are here in a minute. It came into being in 2020 following a ballot initiative. This was voted on by the state of Colorado and approved by just over 57% of Colorado's voters. It's going to cover almost all workers in Colorado. The primary exceptions there are going to be federal employees and railroad workers, and a couple other self-insured self-employed individuals we'll talk about as this presentation goes on. So this is a program that both employers and employees contribute to, and it will eventually be paying out benefits. The premiums right now are 0.9% of wages, and half of that, 0.45%, is paid by the employer and 0.45% is paid by the employee. Again, with some nuance that we're going to get into here in a little bit. After 2025, we're going to be able to adjust those premiums. So the director of the division will be setting that premium rate according to a formula, basically to make sure that we have sufficient reserves in the insurance fund. It's not going to go above 1.2%. That's set in statute. But based on what we've seen in other states that have this program, we really do actually anticipate that those premiums will likely be going down. That's what's happened in every other state. They have started off with premiums and then reduced that amount because they've been able to manage their program very effectively. And we have high hopes that we'll be able to do that here as well. So let's look a little bit at the implementation timeline. So we are currently in the process of rolling out the My Family Plus employer. So this is the online portal that employers are going to use, or the third-party administrators, to register with the division, to pay premium payments, to submit their wage reports, and basically all of the communication that an employer has to have with us at the family division. We are in the midst of a soft launch. We had a small group of employers who were invited to register and to test out this program. And we do anticipate that we're going to have a live launch for all employers in the state very, very soon. I don't have an official date on that, but I expect it will be here shortly. We did just get the link to our website in the chat. You can go there and sign up for our newsletter. And so when that process does go live, you'll be able to check out that portal if you don't have a third-party administrator that's doing that all for you. So starting on January 1st, 2023, this is the big date that's coming up. This is for payroll systems to be deducting premiums from employees. And those premiums will then need to be remitted to the family division through this portal. So Q1 of 2023 is when premiums start, January 1st through April 30th. And those premiums are due on April 30th, actually through March 30th. Those premiums are due to be paid to us on April 30th. And we are going to have a grace period for this first collection. But January 1st, just a couple of weeks away, is when these premiums are going to start coming out, or should start coming out of people's paychecks. And then we get to the big date, January 1st, 2024. That's going to be when we start paying benefits. So that is when covered workers will be able to sign up and request benefits. And so let's take a look at what those benefits will be available for and what those benefits will look like. So when benefits become available in January of 2024, FAMLI is going to provide 12 weeks of paid leave for Colorado workers to keep care of themselves and their loved ones, with the possibility for those individuals who can get pregnant, if they have birth complications, it could be extended by another 4 weeks to go up to 16 weeks in those circumstances. So this leave is going to cover certain life events, like managing their own serious health condition, or to care for a family member with a serious health condition, to make arrangements ahead of military, to deal with the immediate needs and impacts from domestic partner violence or sexual assault, or to care for a new child within the first year of birth, foster placement, or adoption. So this program, again, is going to cover pretty much all workers in the state of Colorado. And let's talk a little bit then about what kind of leave they're going to be able to. Oh, no, I'm sorry. How are we going to fund this? So how are we going to fund this? As I said before, this was a voter approved initiative that's based on premiums. So we've got a couple of different categories here for small businesses, and that's businesses with 9 or fewer employees. They're going to be remitting 0.45% of wages as the premium, that employee portion of the premium. Larger employers, if you've got 10 or more employees, they're going to be paying both the employer and employee premium. So it's going to be at that 0.9%. For self-insured employee or self-employed individuals, they can choose to participate in the program. And if that happens, they have to pay the employee premium. Local governments, we'll talk a little bit about that as we move on, but they do have the option to either participate or not participate. And if they choose to not participate, their employees can then individually make a choice to opt in. So those participating local government employees are going to pay the employee premium. Local governments that opt out aren't going to have to pay anything. Non-participating self-employed individuals won't be paying in. And for all employers, they do have the option of electing to go with a private plan. That private plan has to match the benefits or exceed the benefits that are offered under the state system. But for those employers that choose a private plan, they'll be paying their private plan provider rather than the state of Colorado. So let's talk a little bit about wages. This is one of the areas where we do get a lot of questions. But what we're doing here, in an attempt to make this as easy and painless as possible for our employers, we're basing the definition of wages on the unemployment insurance. So definitions. So you don't have to look at a new system, and we don't want to get into a circumstance where, for the vast majority of people, they're using different wage calculations for family and unemployment insurance. So the calculations are going to mirror unemployment insurance, and we do have a summary of these pages on the employer page of our website. Employers, though, who are exempt from paying unemployment premiums are not exempt from paying family premiums. So this is just for purposes of calculation. I know that there are some employers out there that don't have to pay into unemployment insurance. Unless you're a local government that's opted out, you still have to pay into family. Those employers should refer to the list on our website to gain that information to figure out what they're going to need to calculate premiums here. Premiums are paid on wages up to the federal Social Security cap. So this is actually a cap on the number of wages. I think that's right around $180,000 right now. So you only pay premiums on those earnings. If you have somebody who's earning more, they don't pay premiums on the wages above that. That does change every year. So again, sign up for our newsletter so you can be cut up to date on. And with that, I'm going to turn it over to Lydia so we can talk about how do we count employees.
Thank
you.
Oh, there we go.
Yeah, we had the host had to unmute me. Sorry about that, folks. Hi, everyone. My name is Lydia Walgorski, and I'm one of the policy managers for the family division. And thank you, David. I'm going to go through a few of our slides based off of very common and recent questions that we get from employers and our community across Colorado around the family program. And the first one I'm going to cover is counting your employees. And so when it comes to counting how many employees you have, towards that exemption or that small employer discount of the 10 or more or the 9 or less, the employee count is going to be done once a year by counting the number of employees that you have on your payroll for a total of 20 or more calendar work weeks in the preceding calendar year. So in 2023, employers that report having 10 or more employees who worked for that 20 or more weeks in all of 2022 will be required to pay the employer's share of the premium for all 4 quarters in 2023. And employees that are on paid or unpaid leave, including sick or medical leave, a leave of absence, a disciplinary suspension, should be counted as long as that employer expects the employee to return to active employment. And for some of you that may administer FMLA in your agencies, this may sound familiar because it is based off of that. And because this is a common question, we have another just visual graphic here to help explain this and dig into a little bit of the nuance. And so family is certainly available for seasonal workers, is available for workers that work maybe an intermittent schedule for you across the year. And so we have our little blue men up here or folks up here. And so these the folks in blue have all worked 20 more calendar weeks, right? And so you have a seasonal worker that maybe just works intermittently, or they just work certain weeks, or maybe they are a lifeguard for you, or they are facilities or grounds crew, and they don't work every week, or they don't work every day of the week. If they hit that 20-week cap and they've worked any time during those 20 weeks, then they would count in your employer count towards family. So we have that here in the blue, and then we have this little guy over here in the red. And let's say that your worker, your full-time worker was only with you for maybe 30 for just a few weeks, right? They only worked 33 weeks out of the year, they quit in August, and then you had to hire somebody to come aboard to take their place. And so our person over here in red, that person, they've only worked 20 weeks according to this calendar, or 19 weeks according to this calendar. And so they would not be counted in your employee count. And again, this is for folks that are trying to determine whether they are an employer size of 9 or fewer, or 10 or more for that employer count. Another really common question that we get is, what about our remote employees? And so in terms of counting your employees for family, in terms of am I 9 or am I 10, we take a nationwide count. And so if you are an employer that is maybe based in Colorado, but you have employees that are scattered across the United States, as you see here, you take a picture of all of your employees that work for your company, and they all count as your employees towards that employer count, but again, that 9 or 10. The same thing applies if you are working for a company that is based outside of Colorado. So maybe my company is based in a state that does not have a paid family medical leave program, but I have a certain number of employees in Colorado. Again, we took a look at that national head count. And if you have 10 or more employees nationwide, then you are a larger enough employer to remit the employer share of that premium, and everyone is included in that head count. Now, that doesn't necessarily mean that you're going to pay premiums for those workers that are outside of Colorado, but you are going to include that total number in that 20 or more week head count to make sure that you are a 9+ employer, or you are a 10+ or a 9 and fewer. So you're only going to pay and remit premiums for your employees that are localized to Colorado, but headcount is a different piece of this puzzle. We also get a lot of questions around benefits and what benefits are going to look like in 2024 when they start. And the benefits are administered on a sliding scale. And so when people are taking eligible family leave, the employees will receive up to 90% of their wages based off of their pay bands, and benefits are capped at $1,100 per week. And as David mentioned before, a lot of these numbers in terms of wages are capped at the federal Social Security wage cap, and that number will change over time. And then the benefit amount is pegged to that. And so that might change over time. But until 2025, it is capped at that $1,100 mark, and it's based off of the average weekly wage for Colorado workers. Thank you. And another question we very commonly get is, what about private employers paying premiums, who's exempt, who's not exempt? And so there's only truly an exemption for local governments that opt out. Every other employer in Colorado will touch family in some way. And so you'll be required to provide a robust paid family medical leave program. And you do have a couple of options. We do have private plans, which we're going to talk about here in a second. And then under private plans, we have a subsection of that are self-insured private plans. And so when we talk about private plans, we're talking about a plan that is issued by a licensed carrier in Colorado. And to opt out of the state coverage, you have to say, I have a private plan, and that private plan is equal to or greater than the family benefit. Our self-insured private plans, these are employers that choose to do everything in-house and issue this insurance for them, for their employees. And then we have our local governments, and they have a few options that we're going to get to. Okay. So for private plan, here's what they have to cover. And these private plan rules have been adopted. They are up on our website, and those will be effective December 15th of this year. But a private plan must include the same number of weeks of benefits. It must cover the same level of wage replacement. It is the no additional requirements or conditions. You can deduct no more from the employee as the state plan. You have to cover all employees for the duration of their employment and remain compliant with any additional requirements established by the family division. And so we know that employers may want some time to shop around and figure out the best option for themselves. And so we anticipate this market to come available fairly soon, but for January 1, 2023, all Colorado employers will begin paying premiums. And those who secured an approved private plan on or before January 1, 2024 will be able to apply for a refund of those paid 2023 premiums minus the private plan administration fee. And the deadline to submit a private plan application in order to qualify for that refund is going to be October 31st, 2023. And so the biggest takeaway again is that all private sector employers will start paying premiums next year while considering which private plan is right for your business. And businesses will be able to apply for that refund once that is submitted and we have verified that you have a private plan that starts no later than January 1, 2024. We're going to shift gears a little bit and talk a little bit about local governments. And so unlike our private employers, our local governments do have a few more options when it comes to family, and that is statutory under the ballot language that passed that established family. And so for local governments, there are 3 options. And so a local government can absolutely opt in to family and participate just like a private employer would. And for those local governments, if they have 10 or more employees, then they would pay the employer share of wages, remit premiums, all of the things. If you have a local government and you decline to participate in family, you can do so. You have to take a vote of your governing body. You have to notify the family division of the outcome of that vote, and that decision to decline is good for 8 years. The local government then holds another vote if they wish to continue opting out beyond that part. And employees in this scenario would still have the option to voluntarily participate in the program, but they would be responsible for remitting that 0.45 of their wages along with the wage report to the family division every quarter. So they would come in as a self-employed person in some aspects. The final option that we have for local governments, though, is a local government can vote to decline, but they can choose to assist their employees who want to individually participate in family. And so this means the local government would voluntarily participate in payroll deductions, remit the employee share of the premiums, and submit wage data once a quarter to family. Okay, so I think I turn it back to David now, and we'll look forward to your questions.
All right, so as we've said, these premiums are going to be coming out on January 1st of 2023. And, you know, I watch my paycheck pretty quickly. And if money starts coming out of it, I kind of want to know where it's going to. And I can imagine that a lot of your employees probably also just really want to be able to plan for that. So it's time to start preparing employees for the payroll deductions that are going to start. And we do have a couple of tools. There is a required program notice that has to be posted by January 1st, 2023. And this outlines all the legal requirements and protections of the program. And I know at least some of you have that because I just saw a question in the chat pop up about it that we're going to answer at the end. But there's also a break room poster. And this is mandatory as well to post in a common area along with all of those other lovely employment notices. We do also have available a payroll stuffer. So that can go in with a pay stub. It can go out electronically if you are not issuing paper checks anymore. That is just something that goes out with the check to let employees know what's going on. They're all available from our website, and there are links in the chat so that you can start communicating to your employees so they can know that these deductions are going to start coming out here pretty soon. And so they can start preparing for that, and they know what's going on when that money starts coming out of their paychecks. So let's talk a little bit about some of the additional resources. So in addition to that break room poster, we do have an HR fact sheet. We have a local government fact sheet. We have a sample pay stub on our toolkit page, planning to add more information and resources as the family program progresses. You know, this ballot initiative that created this program passed in 2020, and we have been building it since then. And so we are all still building things. We are answering some of these questions as they come up. And so we are constantly expanding the tools and resources that we have available to share those answers with everybody else. But we do have an online calculator that can calculate premiums and benefits very useful if you're as bad at math as I am. We do have a complete local government guide for everybody, along with posters and written notifications, all of the tools that local governments might need for that. If you work with a third-party administrator, which I'm assuming most of you do here today, we have tools for those third-party administrators to work on as well. That includes all of the technical information they need with file specifications and the like. So then the last thing before we start turning to questions, we do want to hear from you. We have the website. We do have a general email box. We're on most of the socials, not on TikTok. I said that as a joke the first time I did one of these webinars, and then somebody said, well, actually, we're about to be. So I don't know, keep an eye peeled. Maybe we'll do viral dance routines when we're teaching you about social insurance programs. And one more thing that I want to add that is not on this slide, but we are doing rulemaking pretty continuously between the launch of the program and probably even thereafter. Sign up for that newsletter. You will get notices of when we're doing rulemakings. You can come in and speak in the rulemaking process and have your voice heard. And that's critical. We want to hear from employers, from stakeholders while we're making those rules. And if there's something that doesn't make sense, we want you to come in and tell us on the record, so then we can take that into consideration and change it. After each rule hearing, we spend 2 or 3 days in meetings going through every comment to figure out what we want to change in the proposed rule before it becomes the actual rule. And your input is invaluable in that. So with that, I think we're going to turn it over to questions. And Jessica, I did just want to let you know, I got a question that was sent to me as a direct message. So if it's all right, before I turn it over to you to go through the rest of them, let me answer that one. So this question was, did I hear you correctly that 10 and above employers have to pay both employee and employer premiums? I was under the impression 10 and above employee pays the premium unless the employer opts to pay the employee's portion. Can you clarify? So yeah, if we're talking about a company that has 10 or more employees, what they have to do is they have to pay to us premiums equal to 0.9% of wages. And they are allowed to deduct half of that, 0.45%, from the employee's paycheck. So the employer is going to pay all of the premiums and can deduct half of it from the employee's the employee's wage. They can also, if they so choose, cover that on behalf of the employer. That's part of a bargain or a perk that you want to offer to your employees, you can. But so yeah, the employer, pretty much every employer is going to be paying premiums to the family on behalf of their employees. If it's less than 10, you can deduct that 0.45% from the paycheck, and then that is what you pay to the family division. If it's more than 10, you're still going to be able to deduct that 0.45% from the employee's paycheck, but then you're going to be paying 0.9%. So I hope that answered the question. And then with that, let me turn it back over to Jessica to moderate the rest of these questions.
Thank you, David. And I think with that answer, you've answered a couple of these questions, but we will start with Beth. She's asking for verification on deductions being capped at the Social Security wage limit. Can you just reiterate that for us? And I can go back to that slide.
Yeah, and I see Lydia shaking her head, yes. And so we can very definitely verify that for everybody. Premiums are only paid on wages up to the Social Security limit, the same way Social Security is. So that's absolutely the case. Wages above the Social Security limit, you don't pay premiums on.
Thank you, David. And we have another question from Beth. She was asking about on the program notice, employers are not required to deduct family contributions from employee wages. However, starting in 2023, they are allowed to. And as David just mentioned, they are allowed to because you don't have to deduct, but you are allowed to deduct up to half of the premium payment, or you can cover it on behalf of your employees and add it as an additional benefit to them, as David just went over. So I'll move on to our next question from Laura. We are a government entity who declined employer participation. Can government employees wait to voluntarily opt in until January 24, or do they have to start in 2023? I can answer this question or I can toss it to Lydia.
As long as it's not me, I'm happy if either one.
So I'll go ahead and answer it. So yes, employees of local governments who have opted out don't need to take any action until benefits become available in 2024. So once they are able to apply for benefits, they'll voluntarily opt into the program. At that point, they'll have to register with My Family Plus employer as well. So they'll begin to start paying their premiums. And that is the same if you as the employer are going to be deducting on their behalf, but they don't need to do anything until benefits become available in 2024. And I will just mention too that because they're voluntarily opting in, when they do that, they will have to commit to participating for 3 years. So they're not just opting in and opting out whenever they need the benefit. Moving on to Kelly, I will bring up our maps again here for this question. Oops, wrong way. She's asking for clarification on a company's headquarters are outside of Colorado. So let's go to this one. They have more than 10 national employees, but less than 10 employees working in Colorado, whether remote or in person. Are they required to collect premiums for their Colorado employees? I'll start there and I'll hand that over to Lydia.
Thank you. The mute button is not my friend today. Yes, that is a great question. And so you only pay premiums for the workers that are localized in Colorado. And so we are following what the Department of Labor has called localization. And that's been a really well-established rule that we've had for decades now around where work is localized. And so if you have workers that are localized to Colorado, it doesn't matter where they live generally under localization, but if their work is localized here, then those are the folks that you would collect premiums from, and those would be the folks that would be eligible for family benefits.
Thank you, Lydia. In the second half of Kelly's question, as a Colorado company that has more than 10 national employees, but their employees work less than 2 weeks in Colorado, are they required to collect premiums for their Colorado employees?
They are likely not localized to Colorado. If the work is temporary or transitory in Colorado, that's probably not meeting the definition of localization. And so we have some additional resources from DOL on that to explain that, but it is the same process that unemployment insurance does now. And so if those employees are if you're paying for their unemployment insurance in another state, that's probably a really good indicator that the family premiums are going to be treated the same way.
Thank you, Lydia. Looks like our next question is coming from Kelly again. Will the paid leave be taxed federally?
This is a great question. We love getting it. And so Colorado is now, we're up to 11 states that have paid family medical leave optional, actually 10 states in DC as our District of Columbia, right? So the IRS has yet to issue guidance on this and has refused to issue guidance. We have asked and it has not been answered yet. Our ballot did say that when and if the IRS issues guidance, we will make rules on that. And so just anecdotally, most states have chosen to create systems that would allow someone to voluntarily withhold or voluntarily acknowledge that taxes are likely to be happening on the benefits. So stay tuned for that, but the federal government has yet to give us an answer.
Thanks, Lydia. And another tax question that you may have alluded to just now. Will the premiums be pre-tax, allowing FICA savings for both employee and employer?
We don't have good federal guidance on this at all. We are, this is very similar to your UI. It's based off the UI standards. So I think the best way to answer this question, though, is to say, is this a there are deductions from UI that you don't have to count towards, and that is on that link that Michelle posted in the chat as well. And so free tax and post tax is not quite that simple for these pieces. We're working to get better clarification from the Colorado Department of Revenue.
Thanks, Lydia. And another follow-up, will there be coordination of benefits between family, short-term disability, workers' comp benefits, etc., enabling the employee to utilize all of them at the same time?
Right.
Lydia, do you want to explain?
Let me jump
Or-
in on that one. No, just because it's workers' compensation. Up until a month ago, that was where I was. So when we're talking about coordination of benefits with workers' compensation, an employee shouldn't be using both of them at the same time in most circumstances. So employees are going to have to certify that they are not off work because of a work-related injury. And we're going to be looking to medical professionals as well, like verify that this was not a work-related injury, because those employees should be going through workers' comp. Without getting too deep into the weeds on this, there are some circumstances in which somebody could be receiving permanent disability benefits under workers' compensation or partial benefits under workers' compensation, and then have another reason for going out on leave that would be covered under family. So there could be some little circumstances like that, but as a general rule, individuals should not be getting workers' compensation benefits and family benefits for the same absence. So if they're out because they got injured at work, it should be comp, not family. And then Lydia, on short-term disabilities, I'll hand that over to you.
Sure. Thanks so much, David. So for short-term disability insurance, that is really between you and your carrier. And so the family statute does not require coordination between short-term or long-term disability policies and family benefits. However, most carriers will say if there's another wage replacement benefit at play, they will typically not start their payments or their benefits until that other one has ended. So that's really something to follow up with your carriers on. We do anticipate carriers to provide private plans in Colorado very shortly. And so they are aware of this, they are working on it, and that will be a discussion to have if you offer that insurance.
Thanks, Lydia. And I will just mention that our coordination of benefits rules were recently adopted, and this is the topic of our next webinar. You can get that webinar directly in your inbox in the next couple of weeks. It goes out on November 30th. So if you haven't signed up for our newsletters, please sign up. Moving on to our next question from Janet. If we opted out as a local government, but will pay in for the employee, they only pay the 0.45% and not the whole amount, employee and employer, correct?
Correct.
Yes, that is correct. A question here, are H-2A employees exempt as they are for SUTA and FUTA?
They are not automatically exempt. So there's family did not have any exemptions based off of the type of work other than federal employees and railroad employees. And those are both covered under different federal laws and rules. And so but there's no carve outs for immigrant workers, including those that are under H-2A or agricultural visas.
Thanks, Lydia. We have a question here from Jennifer. What is not subject to premiums? On the pay stub example, 125 med, is that the only health insurance type not subjected? Is there a list of what will and not be subjected to the premiums? Yes, there is, and I believe we have dumped that in the chat already, but we have those on our website on the employer page. Just click on wages subject to family premiums. But Lydia, if you want to go over the 125 med, go for it.
Yeah, absolutely. So the 125 are those cafeteria programs that we see and medical reductions that we see to UI as well. And so again, we are using the same definition as wages as we find in the unemployment insurance statute. So if you are able to deduct those under UI, you should be able to deduct those from family as well in terms of when you're calculating those wages. The bigger lift is for employers that have not dealt with the UI system and have not done these calculations before, and we are working on guidance to help get that out and to help educate employers on that. But if you're currently able to do it under UI, a good guideline is to say that that is also the same for family, because we are using the same wages definition.
Thanks, Lydia. And that's a good segue into our next question about reiterating how churches should participate in family or any other organization that is not paying into UI premiums.
Absolutely. So again, family is all employers or most employers in the state, right? And so there are no exemptions for nonprofits or for churches. And so churches and nonprofits that have employees will be subject to family, will be subject to the premiums, be eligible for the benefits. And again, we know that churches have this interesting split between state and federal taxes and taxation, especially when it comes to things like housing and calculating other wages. And so that we do anticipate that will be part of the forthcoming guidance on that, but there are some exemptions in terms of what is housing when it is employer provided versus housing that is employer supported. So we will get into that, but churches generally will be included in family.
Thanks, Lydia. Here's a question we haven't covered yet. For sole proprietors or self-employed workers participating, are they reporting gross or net income quarterly?
That is a great question. And so in our premium rules, and we actually just updated our premium rules as well, you get to choose what works best for you. And so gig workers and folks that are, well equipped to be self-employed, individuals can use the net if that works for them. If you are a gig worker or someone that is not used to doing those calculations and gross makes more sense to you, you can elect to use either gross or net. And as long as the calculation for benefits is done on the same base from what your premiums are paid off of, it's fine. And so there are some specific rules for you in the premium rules that I encourage you to take a look at, but you can choose.
And Lydia, if somebody chooses gross and then they change their mind, can they ever switch?
They can switch one time in that first initial period that they're into family. And so keep in mind that if I am a self-employed individual, when I come into family, I can come in at any time. But once I'm in for 3 years. And so in that 3-year time frame, you can make that switch for yourself once.
Thanks, Lydia. For a small office with less than 10 employees, can the employer share the employee cost?
Absolutely.
And to reiterate that it's only 0.45%, so you can share that however you feel comfortable. I think we covered this question with the church's question, but there might be another layer to this. For employees with Form 4361, which is the application for exemption from self-employed tax for use by ministers, members of religious orders, etc., would they be required to pay into family since they refuse to accept the benefit based on religious reasons?
And the answer is yes, they would.
Mm-hmm.
There isn't an exemption from the program. They would have to pay in those premiums, and they would have the option to use those benefits if they chose to or if they chose not to.
A question here from Jewel: where do accumulated sick vacation hours FMLA leave fall in relation to family? We covered this a little bit, but again, I'm going to quickly move on. So because we have so many questions left, Jewel, we will have that all in our next webinar. Sign up for our newsletter and we'll go into it much deeper. Kaylee, if we have another short-term, long-term disability coverage question, that we as employer pay 100% of the cost, can that? Okay, this is related to private plans. So if we have a short-term, long-term disability with similar coverage and benefits to the employee, that we as employer pay 100% of the cost, can that qualify as a private plan?
The answer is no, it cannot. And so for a private plan to be accepted by family, it has to be fully equivalent, and fully equivalent for family looks very different than what short-term and long-term disability plans currently look like in the Colorado market. Short-term and long-term disability plans generally cover only the worker, versus family covers the worker's family, and a lot of other reasons, for family eligibility than are covered under short-term and long-term disability, like that leave for domestic violence or sex assault, that leave for military exigency. And so to be a approved private plan, it needs to be fully equivalent. We do expect carriers to come up with fully equivalent plans. And so you can have those conversations with your current carriers.
Thanks, Lydia. Here's a question from Angela. What happens with third-party sick pay reporting on W-2s, etc.?
Yep. We have received guidance from the Colorado Department of Revenue that these are going to be included in W-2s under that box 14, right? Which is previous guidance from the feds in terms of what happened with COVID pay and everything else. And so that lovely box 14, which is kind of that miscellaneous box on the W-2 is the place to put this.
Thanks, Lydia. I have a direct message here from Matt. For corporations with one owner and one employee, are they considered self-employed who can choose whether or not to participate in family?
So if you are an employer and you meet that definition of employer and your employee meets the definition of employee under the statute, then yes, you do need to participate in family with premiums and make benefits available.
And for clarity, good job, Matt. Even if the employer or the owner / employee are the same person. So if the owner is the one employee, then they're considered self-employed, correct? Yep. So if you are considered self-employed, then you can choose whether you opt in or not. As long as you have one person that you are paying as an employee on your payroll, then you will need to participate on their behalf. We have another follow-up question on the 4361 employees. Dale says they don't pay into unemployment, so they would not have to pay into family.
So there's a little bit of a distinction here. We use the unemployed definition of wages. So if you think about just a general employee out there working wherever, we look at unemployment insurance law for regard to, is it a wage or is it something else, or is it excluded from wage? We don't look at unemployment rules for the rest of it. So the fact that somebody might be exempt from paying into unemployment insurance doesn't exempt them from paying into family. It just means that they actually do have to pay into family, but they can look at unemployment insurance to figure out what portions of their wages they would pay premiums on.
Thank you, David. We have one here from Sherry. Can you define family member under this program? Great question.
Yeah.
Lydia, do you want to take that?
Sure. So family member is a slightly expanded definition, but it is the same definition that the federal government has been using under their Office of Personnel Management for the last decade or so. And so I believe it's certainly in our rules. It is in the statute, in the ballot. I don't have the exact language in front of me. I see Jessica looking for their slides a little bit for it. But basically, the family definition recognizes that, family can be chosen family as well. And so people that have a close personal bond to you, so aunts and uncles and cousins, there doesn't have to be a legal connection to that person to be considered a family member, which is, again, the federal government has been doing for quite some time. And we adopted, similar rules. We also adopted some guidance within our rules under benefits to give a little bit of clarity for that. And so I encourage you to take a look at those. I imagine we'll be fielding these questions, but it is certainly addressed.
So while Lydia was answering that question very well, I was able to pull the definition up out of statute. So regardless of age, a biological, adopted, or foster child, stepchild, or legal ward, child of a domestic partner, a child to whom the covered individual stands in loco parentis, or a person to whom the covered individual stood in loco parentis when the person was a minor, biological, adoptive, foster parent, step parent, or legal guardian, Basically, you take that last one and flip it around. It goes both ways, kids and parents. A person to whom the covered individual is legally married under the laws of any state, or a domestic partner of a covered individual, grandparent, grandchild, sibling of the covered individual or the individual's spouse or domestic partner, or as shown by the covered individual, any other individual with whom the covered individual has a significant personal bond that is or is like a family relationship, regardless of biological or legal relationship. And that might sound broad, but I can tell you that there is a lot of case law out there defining that, and it's not something that we're overly worried about seeing abused in the system.
Thanks, guys. And I was just going to point out that one of our earlier webinars, I think just a few months ago, we broke down the benefits rules more succinctly. So if you want to take a look at that webinar, or you can obviously refer to the rules. It's definitely a lot of words in our rules document. So if you want to go to our webinars page and check out the benefits webinar, we break that definition down and go into it a little bit more succinctly. One question here from Robbie, follow up on the one employee answer. S Corp owner that receives a W-2 is it different from a sole proprietor that files on the SCHC and has no payroll?
Yep. And thank you for the question, Robbie. And you're right. And so while there are all sorts of tax designations for all sorts of businesses out there, S Corp, LLCs, self-employed, all of those things, right? And so those are kind of great guidelines and rules to kind of get you orientated, but the real definition of employee employer we're using comes from the family statute itself. And so under the family statute, if you read that in terms of you're likely a self-employed person, you match the definition of employer. And so you have the option to opt in to family, you're not required to do that. And so whether or not you are S Corp or LLC, if you are a one-person shop and you've made the definition under the family statute, then you're considered self-employed.
And so again, I was able to pull up the statute while Lydia was talking. So she's got a great answer there, but there's kind of two prongs here. There's the freedom and control. So are you generally free from control and direction in the performance of your duties? And then the other one is customarily engaged in an independent trade. If you have both of those prongs, it doesn't necessarily matter if you're an S Corp, Schedule C, sole proprietor, you're probably not an employee and you don't need to participate. If you don't meet those prongs, then you are an employee and do need to participate.
Thanks, David. And Kelly's asking for the link to the webinar on benefits. Michelle, can you drop in the link to that webinar? There is a video recording on YouTube. We also have the slides, but you can find that on our webinars page. So we'll drop that in shortly. Thank you, Michelle. We have a few minutes left and we've gotten through.
So there was a second part of that question about what documentation will be required to establish the close bond for family members. I don't know yet. One of the things that we're going to be working on over the next year is building up our process for both initial process of claims and for the appeals process. And we don't know what that evidence is going to look like. It's kind of like Potter Stewart's definition of obscenity. We'll know it when we see it. But there are things that you would look at to think about, like, what does it mean to be family with somebody? There's all sorts of stuff that we could be looking at there. We could be looking at cohabitation. We could be looking at shared financial support. We could be looking at all sorts of anything. And so really, if somebody comes in and says, I believe this person has a family-like relationship with me, we'll look at whatever they want to show us to make that determination. And it could be Facebook posting. It could be able to, it could be anything else out there that we'd be willing to look at.
Thanks, David. We have a good question here from Kelly. Will multiple people be able to take leave for one person if they are all family?
So Kelly, if I understand your question. This is, I have 4 people in my family. One of us gets really ill, and multiple people might want to take a leave for caretaking. If that's the piece, yes, you certainly can. And so for thank you for the correction. So for caretaking leave, we do require there to be documentation from that person's healthcare provider outlining the need for the leave, and then of course, connecting those 2 individuals together. And so there's no limit on how many caretakers someone may have. But we do have some really robust documentation requirements and needs for, I need to take care of this person to cover, these things for this amount of time. And the healthcare provider needs to be able to provide that documentation as well.
And that again will be something that we continue to build out for the next year as we build out our benefits system. So we'll have more guidance and more how-to guides as we get closer to benefits becoming available in 2024.
Jessica, did we answer Christie's question on increments?
No, good catch. Sorry, I missed that. Is there any guidance out yet on the increments that family leave can be taken? For example, is there a minimum that has to be taken, 40-hour minimum, or will employees be able to take leave in 1 day or 1 hour increments? Good question, Christy.
Yeah, that is a great question. And so very similar to FMLA, the language is any increment that the employer counts time for, right? And so if my employer tracks me by 15-minute increments, and I need 15 minutes of family leave, then that is game. So there is an upper limit, of course, which is that 12 weeks, and how that is counted. But family is available for incremental use. It's available for continuous use, obviously. And you can, spread that throughout the year, just the same as you can do with FMLA. The caveat that we do have in the statute is that while you can take leave in any increment that is used to track your time, we won't issue a first check until you've hit that first 8 hours. And so we won't necessarily cut you a check for 15 minutes at a time as a benefit. We're going to wait until you hit the 8-hour mark before we start issuing checks.
Many of you out there are law firms tracking people's day in 6-minute increments. I feel for you on that particular requirement.
Hey, well, I think we have gotten through all our questions and we're just about at time. So I thank you all for being here today. This is a great audience, great questions. Thank you, Manon, for hosting us and bringing us together. David, Lydia, do you have any closing thoughts before we sign off?
I would just like to reiterate how much we really do. First, appreciate you all for being here. Appreciate Autopaychecks for hosting this, but really, really want to hear from you. Send us written comment on those rule hearings. If you can't come to the rule hearings, send us emails asking questions. Let us know what's going on. We are building this project, not quite from scratch, but almost based on where we started from, and having that input. This is going to be affecting your lives and the lives of your employees. And so we want to know what you think and how you feel about it. And we want your suggestions, your criticisms, so that we can build a good system and keep building it better.
Thanks, David. I will reiterate one last point is that we really need all of our employers to communicate to their employees if you'll be making those deductions, since that starts in January. You must post this program notice, but we have all of the tools on our website to help communicate to your staff. So get your staff prepared for those deductions, get your payroll systems prepared. You're lucky to have Manon and Autopaychecks here to support you in that effort. So yes, thank you again for everything, and I will hand it over to Manon.
Thank you so much. And I do just really quickly want to say, if you need help getting this posted in the employee portal, because maybe you're mostly doing direct deposit instead of paper checks, and so you don't really know how to get that paycheck stuffer to your employees, let me know. We'll be able to provide training on how you can upload that into the portal and really mark off how many employees have seen and acknowledged that notice as well. So thank you so much, Jessica, David, Lydia, for your time, for your answering all of the questions, and just being so willing and open to help educate us all. So thank you for being here. Can't can't say that enough. And thank you all for joining us today. Again, this recording will be posted on our blog along with the slides. So with that, we will talk to you all again another time. Thank you.